The single most monumental economics transition that any human being has ever seen. And on the other side of this, there's going to be a couple big winners and a mass of endless people who are financially ruined. I'm going to explain the economic pivot to you. This is going to be one of the most significant financial events you'll ever see in your entire lifetime. And the good and bad news, depending how you play this, is that it's just getting started. I'll tell you what this is going to mean for you in terms of your quality of life, your investments, the moves you got to make, how to protect yourself and your loved ones. The ways to land on your feet as we go through this transition that I can show you is just showing signs of happening now. And it's going to be absolutely monumental and devastating for some people who aren't prepared. I was writing an email to one of our peterleeds.com subscribers 2 days ago by the name of Randy, and I pulled out this one part because I summed up my entire investment philosophy about the economy in one sentence. And so now I'm going to tell you exactly word for word what I said to him. History literally needs to break for this economy not to deleverage. And what do I mean by that? We took on way too much debt. The economy's expanded too much. That's why when they raise interest rates, it slows things down. It hurts everybody, costs more money. And now we're going to have this massive deleveraging. And you're seeing it play out now with auto loan delinquencies, bankruptcies, but that's just a manifestation of everything I'm going to talk about in this video about the economic pivot. Because history says that will go the way that I'm explaining to you in this video how things are going to go every single time. And if it doesn't, this will be an absolute snapping of history, throwing it out, crumpling it up, throwing it in the garbage. History says things will happen the same way again and again and again. And if they don't, this will be the first time. So if that's what you're banking on, that's what you're investing, how your philosophy is that this time will be different, I wish you luck with that. But unfortunately, we've breathed in like a lung. I tell you, the economy is like a lung. You breathe in too much, you do have to breathe out eventually. A little bit even. We are in for a massive wave of deleveraging, which will be required to go back to economic health. What's happening? This economic pivot is everything since 2011. That's 15 years ago. I picked that date because that's where things started really getting aggressively bullish. From 2011, right after the global financial crisis by about a year and a half, when things sort of settled down, that's where we'll start looking. So 15 years until now. Listen to what's happened over this time. What we're pivoting from is everything we've seen since 2011 until now. What we're pivoting to is the way things are about to play out, and they're showing signs that it's begun. And if you don't pay attention to this video, and if you don't start taking action now based on some of the things I tell you, then you're already starting to get behind the ball. Since 2011, greed has overruled fear. It's been trampling fear. But now we're about to switch like a light switch from on to off. We're going to replace all this greed and exuberance for fear and reality. On one hand, real estate in 2011, the average home price was $228,000. And what is it now, 15 years later? The average home price has increased to $420,000. That's an increase of about 54% in 15 years. But what about other assets like, gold? It's gone from $1,500 in 2011, just a year or two before we started talking about it and telling you guys about what's going on in China, buying gold from Switzerland and using proxies to do it to hide their purchases. And when I talked about how all the central banks are just hoarding and loading up on gold to get ready for their gold-backed currency, the BRICS nations, this has been clearly happening, and I've been clearly explaining it to you this entire time, from when gold was more than $1,000 per ounce less. So it went from $1,500 in 2011 to $2,645, which is where it is today. In other words, even better than real estate's 54% increase, gold's gone up 57% over that time. But what did even better than that? And you got to give some respect here, okay? I got to admit some respect that this was one of the most lucrative investments of all time ever in the history of the world that the masses were able to tap into. Bitcoin in 2011, well, first let's talk about where it is now. Bitcoin's over $100,000, give or take. It's at $95,000 to $115,000, bouncing around there right now, trying to find a new range. Impressive. Where did it come from in 2011? What was the price at then? 60 cents, 60 cents. That means that in 15 years, Bitcoin specifically, and I don't want to talk about all cryptocurrencies because I have a really negative view on altcoins for sure. But Bitcoin will do well long term. Short term, I think it'll give back for a while. So it was at 60 cents, and now we'll say it's at 105,000, give or take. That represents an increase in Bitcoin prices in 15 years of 175,000%. Well, you might say, Peter, over this time, all things have increased in price. They printed more money, money is less valuable, so everything costs more, and salaries have gone up. Yes, they have, but how much? In 2011, the average household income was $65,570. And now, 15 years later, it's at $80,610. So household income is up 23%, which is less than the rise in stocks, Bitcoin, precious metals, even a lot of other investments of all kinds. Household income is not keeping up even with inflation. That's why it feels so tough to be able to afford things now, because while you're making more money, everything costs even more than that. So you're actually losing ground for 15 years now, a lot longer than that, but I'm only going back 15 years for this video. And when it comes to stocks, you're getting into my wheelhouse, and it's all about market breadth. When you're looking for a market top or bottom, you're looking for an increase in volatility, more uncertainty among investors. When you get to a price where investors aren't sure if it's worth paying that much, and other investors are chasing FOMO, but then other investors are selling at that point, you get a lot of volatility, but it's actually trading sideways. So you see the Dow Jones Industrial Average go up 1,000 points in a day, down 1,000 points in a day. And you think, wow, things are really getting crazy. It's all about market breadth. If every stock goes up 1%, that's a really healthy economy. If only a few stocks go up 20% and the rest don't, that's not a healthy economy at all. That's a bunch of outliers dragging the market along, such as, the Magnificent Seven. But in 2011, the S&P 500 was trading at 1,700 points. Now, 15 years later, the S&P 500 is trading close to 6,000. In other words, nearly a quadrupling over 15 years. The Nasdaq's done even better. 2,700 it was trading at in 2011. And now where's the Nasdaq? From 2,700, it's now at 19,844. This is yesterday's data. I know the Nasdaq's down pretty hard today, so just if the numbers are off, just give me a little bit of what. But just sit with this chart for a minute. Sit with this chart. If you have a 8 or 9-year-old around, have them come in and look at the chart, and they'll explain to you that this trajectory is absolutely unsustainable, which is exactly what I said right before the dot-com bubble burst. It cannot continue on this trend. Not without a complete deterioration in the economy like we saw in Venezuela. Yeah, the market can go up to the moon. Gold can be worth $1 billion. But you're sitting there with no medicine, no food on the shelves. The whole economy is all Mad Max. And there's not a lot of good ways out of that. That's why I always say, yeah, gold will get to 10,000, but don't root for it because that's a bad day. And this is about who saw it coming to actually land on their feet, because that's going to happen either way. When we get to that point, and you can sit there and go, well, I never took action at anything. Or you can say, I listened to Peter in 2012 and bought a bunch of gold. But just sit with this chart for a minute. Do you feel like this is at all healthy? Do you feel that this is at all connected to a mirror image of the massive monetary creation? But it's not really good market breadth when the Magnificent Seven are all pushing the markets higher, even dramatically faster than the average economy itself. So you've got a few outliers that are really cranking it out, and you have a lot of investors chasing those gains. The FOMO is really feeding them. Even the government of countries like Sweden are buying the Magnificent Seven. Europeans, Asians, everybody is putting money into the one thing that's going higher. And so it's going to keep going higher. So they put more money. It's FOMO, and they're just going to drive it all the way past realistic valuations. Nvidia, Apple, Microsoft, Amazon, Google, Meta, and Tesla collectively turned 271% over the 5-year period, compared to the broader S&P 500 index, which returned 90%. So the Magnificent Seven produced triple the gains of the overall markets at a time where the monetary creation was out of control, unlike we've ever seen before, and the FOMO was greater, and the exuberance and complacency among investors has never been matched as it is right now, except once in a while at the very top of a major bubble that pops. That's the only time it's ever been more extreme than right now. Check out this headline from CNBC. Magnificent 7 stocks responsible for more than half the S&P 500's 2024 gain. We're also seeing a huge lurch in the amount of greed that's out there. Fear has been forgotten, completely ignored. People don't even understand there's a second aspect to the yin-yang. There's fear and greed. And it's just about greed. It's about greed since 2011. And why wouldn't it be? Look at how the markets have done. This whole time people are telling you that they're so smart. They're confusing a bull market for brains and thinking that they know what they're talking about. And so they're going to tell you what they're thinking because they think they're right. And it's sad to see it all play out, but this is the way it's going to go until the pivot. And then they'll say, oh, well, I didn't see that coming. Here's the reason I missed it. And they'll give you some blah, 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 blah about why they told you the wrong thing. But if you have any fear of missing out, which it'd be weird if you didn't after the last 15 years, there's so many things that happened that were monumental that if you have fear of missing out, you would have been feeling it. But if you have fear of missing out ever, you're going to love this video. We are going from 15 straight up years, wildly exuberant years, to the popping of what is going to be the single greatest bubble of investing history of all time. Your grandkids will be reading about this in their history books. This is going to pop. It's going to be bigger than the dot-com bubble. It's going to be bigger than the Dutch tulip bulb mania because we are more extreme in every possible way. We've gone further in every way. Valuations are absolutely meaningless now. And with all these multiple years of a strong stock market, even though the economy went the exact opposite way the whole time, we're seeing dramatic complacency among investors, which is a major warning sign. And you can see what I like to do. Complacency you can see if you look at the VIX, the fear index, the volatility gauge. It's all the same thing. And you can't trade the VIX. You can't buy and sell the VIX. It's just an output. It's telling you what kind of action there is in put option buying, which are bets against investments. You're really leveraging to try and expect the markets to come down. And if they do, you make a ton of money. That's what put option buying is about. And they track it with the VIX, and the more things get worrisome or scary, more put option buying there is. And you can tell when the mud hits the fan, the VIX always spikes. And if you see the VIX on this chart, these 2 days, that was how the VIX acted in response to what happened in the markets when the Dow Jones dropped so meaningfully over those same days a couple of weeks ago. You can see the similarities between the two charts where the VIX responded to this like that. And if you guys took my trading chart course, you'd understand what all these candles mean, but it's very simple. It's certain patterns set up on the charts that tell you the next move of investors. Excellent for swing trading, really profitable if you know what to do and if you understand how to look at these charts because they're telling you so many clues. It's like a crime scene. A detective probably notices a lot more than just the regular beat cop who walks in there and discovers the body. And everybody who's been around for 15 years but not 20 thinks that they know what they're doing. They think this is an easy game. They think that there's a lot more greed to chase. The thing about greed, it rewards you. So if you think, well, I made 50%, maybe I can make 100. And you make 100, you say, okay, well, maybe I can make 150. Maybe I can make 300%. You just keep feeding it in for greed. If greed gets triggered, you'll just put more money in and feed and fuel the greed even further. I don't know about you. That's the way I am. I'm just talking about myself.
We must protect the position of the American dollar as a pillar of monetary stability around the world.
Because of this excessively elongated, unnatural long life rally that we've seen, fueled by dramatic monetary creation and ridiculous policies, investors are confusing a bull market for brains. People in general, the general population, is also confusing unpayable debt loads and creating new money to pay for things for a strong economy. You've been told the economy is strong. The stock market went up, unemployment rate's low, so I guess we're all good, right? And that's what the pivot is. Reality just keeps on showing up. 3 things can't be hidden: the sun, the moon, and the truth. The general population is confusing unpayable debt loads and monetary creation for economic strength. And that's why you're seeing all these debt ceiling antics. And I keep telling you every time when they say, oh my gosh, we ran out of money, we got to close down the government, we got to raise the debt ceiling. And every time I laugh and I tell you, it's not done. This isn't the last time. They act like, oh, we solved it. We came to an agreement. Of what? Agreement of what? you're paying too much for things, you're not making enough money, you're not covering your debts, you're just taking on debt to never be paid, to pay for all the stuff you're buying or using or building. And then you have a bunch of politicians getting paid to argue and debate and try and get this debt ceiling thing to get passed. It's not even a real thing. It's like a border or stress or guilt, which I talk about in my Upthinking book. It's not even a real thing. It's just in your mind. There is no debt ceiling, especially when they say, okay, we'll make a debt ceiling for fiscal responsibility. If we do that, we won't have to worry about the economy going the wrong way. They do this years ago, and then we just keep raising it and suspending the debt ceiling. No one has ever stopped and really fixed anything. We're just playing around here. You could remove every mention of debt ceiling ever, and it would literally make zero difference to anything at all. Except that all the money you paid for these idiots to talk about it, you could have put in your pocket and maybe filled in a couple of potholes or given more supplies to teachers or better technologies for law enforcement officers. But no, let's just pay these politicians to live off of our tax dollars and just talk about stuff and act like they're solving some kind of made up problem for us. But with all this monetary creation and taking on all this debt and having the reserve currency, it's been wonderful for us. It's been great for us. And that's sort of the biggest hardship that people are going to face. We're losing all the benefits that we've been enjoying for so long that we didn't appreciate at the time because we just assumed it was our birthright or something. We have tremendous advantages because we can give American dollars that we just created, they're still hot off the presses, to other countries, and they just send all their stuff to us, and we use it. That's why things don't cost a lot. You think things are expensive now with inflation? Just like I always say, just wait. I'm early, but I'm always right. Just wait. You know that there's so many ways this economy and you and I will both suffer because we're slowly losing the reserve currency status. Now there's a competition to the US dollar, which is the BRICS currency, which is actually backed by money, which is backed by gold. Gold is money. Our dollar bill, a $20 bill, is a currency. Money has tremendous value since the dawn of time. You could have had gold 1,000 years ago and somebody would have given you value for it. And I know that a lot of you said, well, isn't the US dollar going to decline in value? And I see that it is. In 2025, it's going to come down a lot, which will mean that things like precious metals, anything you buy with US dollars, commodities, will cost more, which then feeds into the input cost of anything we buy from other countries to make a product for you. So then that has to also cost more. But yes, the US dollar will fall this year significantly, in my opinion. And you say, well, then shouldn't we get out of the US dollar? If it's going to be less valuable, why don't I get rid of US dollars and buy something else? Yeah, if you buy gold or money. But the thing is, that's kind of like running away from a glacier. Like it is moving and it is going to move and you know where it's going, but you don't have to like run. In terms of the time window, you've got plenty of time always, but it will continually deteriorate. This is what the pivot is. This is when reality returns to the value of the US dollar. And you say, but the US dollar is so strong right now. And it is. It's very strong right now, but not in relation to money. Gold in US dollars has never been at a higher price than it is now. And it's got more room to go. But when you compare the US dollar to money, it is losing value. And I also thought other things go up in value a lot too. There's more people buying fancy cars, more people spending more for artwork. What about diamonds? I had that thought, so I looked into it. Here's a chart of diamond prices. And the thing that you notice is this big drop off here. And what else is happening now? And this is why I would never invest in diamonds, especially right now, because they can produce artificial diamonds right now that are completely indistinguishable from the real thing. Therefore, what is the value of a diamond? It's like the difference between the value of Bitcoin, which is limited, to the value of beer coin, which I think, I don't know, maybe it is, I don't know, isn't limited, in which case anyone can irresponsibly just make unlimited amounts. What is the value of something that could be created, replicated by a technological process? And just before we get into this massive pivot and what that means and how it plays out, you got to understand, a lot of what we talked about in terms of the rampant exuberance, all of those things feed on themselves. FOMO feeds on itself. Stock market increases, feed on themselves. Cryptocurrency increases, feed on themselves. It attracts attention. It attracts more dollars. It also gives people confidence that they made the right move in the first place. And if somebody makes $1 or $2, they're going to be shouting from the rooftops about this great, wonderful investment. But then they get caught offside because they're not expecting the pivot, which is happening now, and you're expecting it, so you're going to be in a lot better place than a lot of people that are going to get absolutely blindsided. But this all leads us up into the big economic pivot. The chart of the NASDAQ, you can see it broke above 20,000 a couple of times, but now it's starting to hit a ceiling here. And if it tests and falls back from the ceiling 2-3 times, that's when you know that that's going to be the market top. I take a lot of cues about what's going on with the economy from the world around me. Lineups at stores, what people are talking about, what the shoe shine boy is saying, when the cab driver tells you to buy some .com stock. When they're giving you details, or people like that, used to be the shoe shine boy, whatever you want to insert for today's day and age. If they're telling you how to invest with confidence, even though they've had 1 or maybe 2 wins, then you know that you're closer to a market top. And right now when you listen, everybody's conversation, they're talking about where they made money, how much money they made, what they should do to make money, what you should invest in to cash in, where the opportunities are. It's all about profit, profit, profit. Where to get profit that they've got, who else has gotten some profit. When that shifts, and it's already started now, the conversation will have a different feel to it. People will talk more about someone they know that lost money, or be careful about this, or the overall feel of the conversation will go more negative. Pay attention to that. It's very subtle, very hard to catch, but it'll be in your face. You can't avoid it because you might go out and buy a coffee. You can't help but listen to what the dude beside you is saying. You'll notice the conversation is in the process of changing right now. But rates have been dropping for a while worldwide too, not just in America. We're actually one of the countries that is late to the game, or one of the last to move with these rate reductions. But if you look at this chart, and I'm going to tell you this again, what apparently is clearly obvious that most people don't understand, including economists for some reason, which blows my mind, the recession will start. Typically, the gray areas on this chart are recessions. The line is the interest rate. And when interest rates start to fall, the recession typically begins then. Like here, and here, and here, and here, and here. That's why I'm saying that history would have to break for this not to continue. When the recession starts, it's because interest rates start to lower. And you can argue why that may be, but often the argument is that if rates are lowering, it's because they know there's a problem in the economy, so you're already going towards recession, which yes, is the exact case that we're in right now. But what happens when the recession starts? Historically, that's when unemployment really starts to get going higher. Right now, there's a lot of layoffs that haven't been fully absorbed into the numbers yet. There's more to come. But the majority of layoffs will happen once the recession starts, and that's going to spike the unemployment rate over 5% for sure. But I predict it'll hit double digits in not too long of a time. And as this economic pivot plays out, that's when everyone goes from greed to fear. And you understand that FOMO can drive things higher and even higher and even higher. But there's reverse FOMO, where when you know that stocks are coming down, you might want to buy the stock. You might have great expectations for where the stock's going to go, that the company's doing really well. But at that point, you'll know that if you wait a week, the price will be even lower. If we wait 2 weeks, it'll be even lower than that. And all of a sudden, everyone just puckers up, everyone stops buying, and that just exacerbates the negative FOMO. At that time when the fear starts to show up again, that's when everybody goes risk off. You start looking at things like precious metals, real money, or you get U.S. Treasury bonds, or you get out of the really high-flying Magnificent Seven stocks and all the other ones do, like I've been telling you to do for quite a while. In that risk-off trade, that's where things start to happen, such as the reversal of the wealth effect, which is right now more extreme than it could possibly ever have been ever. The wealth effect is not a real thing. It's like stress or guilt or borders or the debt ceiling. It doesn't actually exist. You're just told that it exists, but it's not really a thing. So when everybody goes risk off, that's when things like stock markets start to come down. And then if that gets to a point where you have margin calls, forced selling, that can really exacerbate the downside. And you've heard a lot of people, if you're watching any kind of financial stuff, some people say the market doesn't have corrections anymore because they're delusional. And then other people say, well, we're going to have an 85% downside. And I just always say that it doesn't matter if we go down 50%, 85%, or not at all. What's most important is that you protect yourself, you land on your feet, you get in a better situation in place no matter what happens. No matter who the president is, no matter what happens in politics, As long as you're paying attention, you'll know the information you need to know to make the decisions you need to make. And hopefully I can help you with some of this. And maybe you don't agree with everything I say, and I really hope you don't. I'm wrong plenty of the time. But I'm generally correct about things about the economy almost always. It just takes longer. That's why I always say to you guys, well, Peter Leeds says, just wait. Oh, you said gold's going so much higher and it only went up to $1,900? That's what I tell you. I go, just wait. We're not done yet. Just wait. Are we done yet with gold prices, for example? Not even close. But the point is, once stocks crash, or barring a crash, they start to correct. What that does is it hurts the wealth effect, which also plays into real estate, which will start bringing real estate values down finally. And also then you'll see things like Bitcoin, which is long-term, sure, it's going to do great. Short-term, there's a lot of risk here because that's a risk-off trade. It's going to wipe out a bunch of value of cryptocurrencies. So what we're dealing with right now is a massive overall economic trend reversal, which is happening at a time when we've got unbelievable amounts of indecision among investors, which is only now showing signs that it's begun. And when you say signs, what do you mean, Peter? Well, I don't know. Let's talk about this. A massive deleveraging, which is going to spike auto loan delinquencies, which you've already seen starting. It'll get worse. Unpaid credit card bills, increases in the economy-related homelessness. Spiking debt levels for the government, for you, for your neighbor, the company you work at, the state you live in. Government shutdowns and the suspension of the debt ceiling. A bunch of delusional stuff because we can't admit that we don't have the money to pay for the stuff we've already bought. You're going to have longer lines at the food bank. You're going to have corporate defaults at record levels. You're going to have bankruptcies rising fast as they already are. And this is at a time when most families don't even have $500 for an emergency. You've heard all the stats. You've heard all the reports. People are struggling right now, which is why I'm going to tell you what you can do about all this, because this is serious. It's very important that you make the right decisions today about this. There's things you can do so that you avoid all the detriments of everything I'm talking about right now. Once we've fully pivoted, there's going to be dropping stock market prices, margin calls, dropping real estate prices, falling Bitcoin prices, decreases in your quality of life, bankruptcies, defaults, rising sin industries such as alcohol, gambling, drugs, and even greater financial hardship by far than you're experiencing right now. People are already having financial hardships. It's not news you want to hear, but some of you want to benefit from what I'm telling you, understand what's happening so that you can land on your feet and make the best moves for you and the ones that you love. That's why I've been preparing you all this time, giving you recession tips, talking about paying down your debt, spending less money, having a side hustle, taking this seriously, educating yourself. I'll put a link to a video at the very end where you can see my recession tips, because a recession, if it's not here now, it's going to be here soon. Which makes this such an important time in the world, in your life, for you to decide what to do. And I like the idea that maybe I could help you through some of this. There's a couple of ways that I can. Two different ways. Either you get the peterleeds.com newsletter, which comes with the Peter Leeds app, all our content sliced up, searchable in your pocket. Or you could buy the app itself a la carte, that's $20 a month. Or even better, you become a Peter Leeds Insider. And you decide what kind of support you want to provide to get more from us. If you don't want to pay $5, pay $3. If you're a Peter Leeds Insider, you have direct contact with me. You can ask me anything you want, anytime you want, and I'll help you through what is going to be the single most monumental economics transition that any human being has ever seen. And on the other side of this, there's going to be a couple big winners and a mass of endless people who are financially ruined.